Good afternoon, everyone. Today is Wednesday, the 9th day of July, 2025. Okay, so today I have stuff that I want to go over, some things that I want to go over. For some people who are having issues understanding things like range bars and things like that, I'm going to go over some basic stuff. I have some other stuff that I know some of you guys have been wanting me to do for a long time, and I'm still working on it. I'll give you just a sneak peek. Is that it? Yeah, there it is right there. Little sneak peek. Which one did I shut off? There. That's a swing trade signal right there. Okay, on the 250 range YM. So it gives you that signal before the bar gives you the green arrow before the bar that you should buy. Gives you the red arrow before the bar you should sell. Now obviously I'm still working on it. Gives you the green arrow before the bar you should sell. Now these are 250 range bars, alright, so every bar is 250 ticks. That is $1,250 with a with a regular contract, or $125 with a micro. Okay, so you guys can take fewer trades. You know, this is like a whole 2 days right here. This was Tuesday the 24th of June was the last one here on the 250 range. But I mean, it doesn't have to be a 250 range. You can do it on any range you want. This is 100 range. Okay, I'll get back into that in a little bit. All right. For right now, I want to trade some. I want to make some money. I want to trade. I want to get off the YM. I want to go back to the ES7 range that I normally use right there. Okay, and we'll see if we can make some money and answer some questions and cover some basic things at the same time. All right. Now, one of the things that somebody had a question about, they're having a hard time understanding range bars. Okay, so let's just look at a range bar. Hang on a second. Let me move some stuff around here so I can actually take some trades too while I'm doing this. Let's just look at a range bar in a scenario where you would use the features of a range bar to enter a trade. Okay, like right here, for instance, on the Russell. All right, it's a 9 range. That means every bar is 9 ticks high. All right, let me spread this out so you can see. Every bar is 9 ticks high. There, every bar on this Russell chart is 9 ticks high. So from the top to the bottom is 9 ticks. If I hover over this like that, this was working before. It's not working now. Okay. Well, usually if I hover over it like that, it will it'll give you the information I was looking for. But if I just do this right here, you can see the open, high, low, close up here, the high and the low. There's going to be 9 ticks between the high and the low. Over here, between the high and the low, there's going to be 9 ticks. For every closed bar, there will be 9 ticks there. Right? The difference between the high and the low. That's why I'm using a 9 range bar. All right, because if I wanted to sell, if I had a signal, like this is a signal here to sell on a down close, if I wanted to sell on a down close, and I knew where the top of the bar is, so the top of this bar, if you look over here, the high of the bar, and if you look up here, the high of the bar, the high of that bar right there is 60.6. So I know the bottom of the bar is going to be 9 ticks below that. It's going to be right here, right? So if I wanted to sell on a down close, I would put a sell stop limit 1 tick below where I know the bottom of the bar is going to be, and that would be at 59.6, all right, which I already did. And so I had the order waiting there, and when the bar closed, it entered me in at 59.6, and now, once it goes 5 ticks into profit, which it already did, I got to move my stop to break even. So now my stop's at break even on this. Okay, now what I anticipate is that it's going to get down here to the prior swing low. Now, the prior swing high and low, they're all delineated by the outer bands of this right here. You see, we just ended up with a break even on it, but they're all delineated by the outer bands of this. This shows you the most recent high and low since this either came out of the overbought or the oversold, depending on what color the background is. Okay, so that's a bunch of information right there, but do you all understand what I just explained? I did not know you were in an ES trade. I can get to that though. How do you determine the number of range to use? You know, I change it from time to time. It depends on volatility, Jenny. No, like the NQ, I have a 19 range right now. I've been using a 19 range for about a week because the volatility really slowed down. On the 47 range, I just wasn't getting any trade setups. So I just dropped it down to a 19 range. And so on a 19 range, it's 5 points from the top of the bar to the bottom of the bar. Alright. Now, with the Russell and with the gold, it's on a 9 range because there's 10 ticks per point. Right? So if you're doing the math ahead of time, if you're saying, okay, I know the top of this bar is right here at 59.9, it's a lot easier to say, okay, well, I'm going to sell, 58.9, which would be right here. Now, that's not where the bar is going to close. The bar is going to close at 59. If the top is at 59.9, the bar is going to close at 59. But I'm going to sell 1 tick below that, so the bar has to close, and then it's going to fill me once it does close. Like that. If that were a trade, it's not actually a trade. But if it were a trade, then that would have just filled me right there, and I'd be in it. Okay? That's why I use the range bars. And the question was, how do I determine which ones to use? If you look at this, go to a 47 range. Okay, this is what I had been using for a couple months. Because it was, we had the volatility, and it was given us, since April. Right? April 1st, I think. We had a ton of volatility, and we're getting a ton of trades with the 47 range. But then last month, the volatility died down. A few weeks ago, really. The volatility died down. And I just wasn't getting as many trade setups. And I trade in a 2-hour window in the morning, and then on Wednesdays I trade in this 1.5-hour window. And I like to have a lot of opportunity to trade, right? To show that things work and to actually make money with it in those windows. And so I dropped it down to a 19 range because if you see in here right now, this is the whole day. Right here, well, the morning session anyway. The whole morning session was from 9:30 to 11:30. So from here to here, with the 47 range, is the whole morning session. I can get it all in one screen. If I can get the whole morning session in one screen like this, you might want to go. You might want to go to a smaller time frame where you can't do that, right? Because that means there's just not that many opportunities. There's not that many bars. It doesn't mean they're not going to work or anything like that. It just means you're not going to have as many. If I go through here and you look at everything in here, like when you have the blue background, you're looking for things that come out of the oversold. If it's coming out of the oversold and it's coming off the midpoint, then it's a possibility of a trade, right? So right here from 9:30, you had one that came out of the oversold, but it wasn't anywhere near the midpoint. You had another one that came out of the oversold, nowhere near the midpoint. You had another one, you wouldn't do this because it didn't make it up into the overbought. You had another one right here. This is the only one right here so far. The first half an hour we had one trade, and that would have been a decent trade. It wouldn't have stopped out. And then the background changes colors, so now you're looking for it to come out of the overbought, off the midpoint. That one didn't. This one right here would have. Nope, that didn't actually come out till here. You could have done it. Nope, you couldn't do aggressive. You had to wait till it came out. And that wasn't anywhere near the midpoint when it came out. This one right here would have been your first trade. So in the first hour and 15 minutes, you would have had 2 possible trades on the 47 range. Right? And then you wouldn't have had another one until right here. So in the first 2 hours, you would have had 3 trades. Alright, whereas in the first 2 hours on the 19 range, I actually traded 14 times this morning on the 19 range. Okay, Jenny? Now, were you there this morning watching that? Because there were a bunch more trades that I didn't do. But the out of the 14 that I did do, I ended up with 107 ticks profit with one contract. Where's my YBR? I don't use the YBR when I'm doing TV trades. Alright, you can put that on if you want to. That's for people that are doing trading IQ. But when you're doing just TV trades, then I'm sorry, I don't need to look at that. When you're doing just TV trades, come down here and make sure you have TV trades checked here, okay? By default it is. Make sure you have that checked. Alright? Because that, you see up here, watch how the black line moves around. Right? Now the difference is that it's going based upon this when you have TV trades checked. Okay, it's going based upon this. So you're going to have TV trades checked when you're doing it using TV trades. Okay, and so that's why I use range bars. Alright, and that's when I don't get a lot of trades in a larger time frame, you can just go to a smaller time frame. That is one thing you can do. You can also change your trading style. Alright, now let me just show you what I mean by that. If we go back to the 47 range, right? If you like to trade on the 47 range, we have fewer trades, more risk, but bigger targets. You can go down here and flip on. You got to undo the optimum trigger, right? And go to style and turn on the div area. You can use it as an area, you can use it as a line, either one. But what you want to do is you see the blue going into or out of the oversold by itself. Like right here, you would buy the open of the next bar. Right? When it goes by itself, you buy the open of the next bar, you would sell the open of the next bar, you would buy the open of the next bar. Yeah, shut that off. Over here, you would sell the open of the next bar. Right here, you would buy the open of the next bar. That only went a little way. Here, you would sell the open of the next bar. Regardless of what's going on with everything else, you don't care about any of the colors or anything like that. This is just being really aggressive trading. Right here, you would sell the open of the next bar. Here, you would buy the open of the next bar. So in that same period, with the 47 range where I only had three trades when I was doing it conservatively, you could have a ton of trades doing it aggressively like this. All right. Now, if you're doing it without regard to the background color, all right, then that's really super aggressive trading. All right, where you're just selling it every time it goes into the overbought, you're selling the open of the next bar. If it goes by itself, you're selling the open of the next bar. And every time it goes into the oversold, regardless of what of anything else, you're buying the open of the next bar. You're selling the open of the next bar, you're buying the open of the next bar, you're buying the open of the next bar. That's really aggressive trading. I mean, it leads to a lot of over trading. But if you're on a larger time frame, then you won't be over trading as much. And it works great, especially when you're in chop. It works particularly well when you're in chop. Okay? And so when you see these periods right through here, it's a little bit choppy. That's when it works really well. That is really aggressive trading. You can do that all day long if you want to. And that, when you turn on the optimized trigger, that has a lot. It has a lot to do with that. All right. It's not exactly the same. If I turn on the optimized trigger, it's not going to be exactly the same, but there's going to be a lot of it in here. Like this would be white, and this would be white, and this would be white. But if we just highlight the ones right here, using this approach, that right there, that right there, and I'll go to the optimized trigger in a second. I'll show you. I'm trying to show you the different looks that you have at your fingertips that you may or may not realize. Okay, if markets slow down, you don't want to change time frames. You're comfortable with the risk reward that you're using. Okay, I'll show you all that in just a sec. Okay, so right now in the trigger, the TV trades box is right here under inputs. It's right here. It's on by default. Okay, so what you're gonna have to do is put in the password. Now, if we turn on the optimum trigger, you see the stuff that I just showed you there, it's aggressive, but the optimum trigger shows you a different look. Similar idea of buying and selling regardless of everything else. When it's white and it goes into the overbought, you sell. When it's white and it goes into the oversold, you buy. But they overlap sometimes. You see it overlapped right there, it overlapped right there, it overlapped right here. That could give you some sort of comfort when you're in a trade, but you don't have to do that. If you want to just do the optimum trigger, you can just do the optimum trigger. The one thing about the optimum trigger is you get the alerts on it if you want. You can have it sent to your phone and let you know that you have an optimum trigger trade triggering. But Jenny, it's right here under TV trades. If I go put a fresh one on like this, if I go to here and go to favorites, I go to range trigger, by default this is what it looks like. Right? TV trades is on, show retracement levels is not on, the password is not in there, optimum trigger is not enabled. So none of this stuff over here really works. You can change the color down here, I think. No, actually, none of this stuff works until you put a password in, and then you determine what works. After you put the password in, if you click display optimum trigger, then that means the stuff up here works and the stuff down here doesn't work. Okay. All right. With using the div area, can you do the conservative trade too, or no? Well, yeah, you can. You can. That's kind of what I was getting at, Wayne. Wayne's question was when using the div area, which if I get rid of this, so it's not too much stuff, and if I change this back to just that, And so now I'm using the div area, right? And so the conservative trade in the div area, you mean the real conservative trade, Wayne? Okay, you don't need the div area to do the real conservative trade. Okay, to do the real conservative trade, you're just waiting for this to come out of the overbought or oversold with the right color in the background. Alright, to do the real conservative trade, you don't need this at all. You're just looking for this to come out of the oversold when it's blue. You know, when the background is blue right down here. Anytime it comes out of the oversold and the background is blue and you're coming off a midpoint, that's the ideal time to trade. Right here would be one. Right here would be one. That's not one to pull back too deep. Right here didn't pull back deep enough. Right here is not one. Right here would be one. Right there. Okay, do you see what I mean? Okay, that's the real conservative with the color. The mid-level conservative trade is when you go into the oversold right here and the background color is right, you buy. When it goes into the oversold right here and the background color is right, you buy. Goes into the oversold right here and the background color is right, you buy. That's mid-level conservative trade. Or it's like a medium level trade, I would say. Okay, medium aggressive level trade, mid-aggression, mildly aggressive trade. Whatever. But if the background color is right and you go into the oversold, you buy. If the background color is right and you go into the overbought, you sell. Okay? That's the mildly aggressive trade. Now, the really aggressive trade is when you add the div area back in there. Alright, you add the div area back in there, and it doesn't matter what the background color is. You're just selling whenever it goes into the overbought by itself, selling whenever it goes into the overbought by itself, buying whenever it goes into the oversold by itself, selling whenever it goes into the overbought, buying whenever it goes into the oversold. You see, these are, right now it's a 47 range, so this right here, from here to here, is a lot. Now if I put the TV trades back on, it will tell you over here, on this bar, right, this bar right here, it tells you right here the buy profit in ticks. Went 38 ticks positive before it retraced. So if you bought that, it went up 38 ticks before it pulled back down. So even though it looks like that went down from here, it went up 38 ticks before it did. Okay. It is a lot of words. You need me to say something slower? If you want me to go over anything, Ricky, just tell me what you want me to go over. Okay? If you want to go over anything a little slower, then just let me know. So I took a break even on Russell trade. I gotta write that down. Took a break even on Russell trade. I should have taken some profit on that. I forgot that I'm keeping track of this. Alright, let me bump this down a little bit like this. And we'll see if we have any other trades triggering right at the moment. We do not. A down close here on the Russell would be pretty close. Now that one that we did before was over here. Alright, we ended up taking a break even on that. Oops, we ended up taking a break even on that. This is, you'd be looking for a long trade here, but it's retraced too far. Alright, and you'd be looking for a long trade here, but it's retraced quite a ways on that one too. The up close right there, you see it's got the bar color is red. That suggests that the background color is going to change to red. Alright, so if you waited for an up close on this bar, the background color may be wrong. So you don't want to be proactive on that. Did you guys catch that? It's important that you understand that little thing that I just said. There may be, but look right here. You see this didn't make it into the overbought from here, Wayne? Came out of the oversold and didn't make it into the overbought. That shows weakness on the upside. Okay, see how this one went all the way from the oversold all the way up to the overbought? That means you can take more trades in that direction because it's showing strength. Even though it doesn't actually look like it's got any strength, that's what that suggests. Okay. So here, right here, we went all the way down into the oversold. We pulled back up. Now we put in a double bottom right there. You could take a down close here. You could take a short on a down close here on the Russell. It'd be 60.4 down to 59.4 is what you'd be selling on that. Now you see how I did that ahead of time? Oh yeah, I need to go to 19 range. Thank you for that, because we're not going to have any trades in there. Do you see how I just did the math on that? So the top is at 60.4, so you can sell 59.4 on this. 10 ticks below the top of the bar. That's why I use range bars, because I can do that ahead of time really quick like that. I can say, alright, I know exactly where I need to put my order. Now let me crunch this up a little bit. a different paint bar on this thing right here. I'm not sure which one I got going on there. Yeah, let's shut that off. Okay. And alright, so we would have been looking for 60.4 on the down close. Now it's going to be 59.5 on the down close. It's probably not going to turn into anything here on the Russell. Okay. Alright. On ES, how did I get the bars to change color? It was down here, Daryl, in the range trigger. I shut off this bar color right here. Right, if you turn that on, it matches what you got going on down here. And that's the conservative bars. So if I shut the conservative bars off, and I shut off the bar color down here, then it'll put it back to this. Now what I want in here is I want these to be red when we have a red background and blue when you have a blue background. But one of the key things that I just said a second ago, I don't know if you noticed, like right here we have a blue bar with a red background. That suggests that when this bar closes, you're going to have a blue background. So you wouldn't want to be proactive on a long trade yet. Do you get that? You wouldn't want to be proactive on a long trade yet. You don't want to put a buy stop limit order on this if it were gonna, if it were gonna give you a long trade, for instance. Or I'm sorry, if it were gonna give you a short trade, for instance, on a down close. This blue bar suggests that the background color is going to change to blue. So if it does give you a down close, which would trigger in a shorting opportunity, but it would be negated by the blue background. That's a lot of rules and a lot of words. I basically just want you to trade, the background's the right color. This is one way to see what color the background should be. It's a way to avoid taking a trade when the background's likely to change on you. That's what I was trying to show you right there. Okay, because you have a lot of information that you probably don't even know you have. This used to be such a simple thing. I was on somebody's desktop yesterday. I was on Jill's desktop yesterday. And she had the TV Trades range trigger back from January. And if you look inside this, if you go about this script, you look down here. Now, from January, right here, all these things changed. I made all those changes to it since January. So I added a whole bunch of features in there for you guys to make your trading better and easier. But it is a lot more stuff. When I looked at hers yesterday, she only had like 4 things right here. She had like down to here, and different words, but it was like down to here and nothing else. And on this side there was almost nothing either. See how it changed to blue right there? That blue bar right there said the background color is likely to change to blue on the close of the next bar. That's what that meant. Okay. And so the order that I had waiting over there never got filled. Here it is. It never got filled. Okay, so now what we're waiting for is another opportunity to take a trade. We just don't have one yet. Alright. Oh, dang, there goes a half an hour. But we did cover some stuff. I want to make sure I cover everything that you guys, any questions that you guys have. You shut off the optimoid trigger and place the very on, but you have times green and red bars. It's inside the TV Trades range trigger. It's this right here. Shut that guy off. And you see how it puts the bars green in there when it's green down here. Turn that off. Okay. Do I ever trade the ES on the 4 range? I haven't done that in a long time. Can I please go over the method? Is this your first time using this method? Sure, I'd be happy to. Alright, let's just start out with, well, I want to take a trade in here, so I'm going to shut off the optimized trigger on this, okay? And we'll just use, that's recalculating it. Okay, we're just going to use the basic trigger down here, okay? When you have a blue background, like this, you want to trade long. You want to be buying when you have a blue background. You want to be selling when you have a red background, buying when you have a blue background, alright? we'll start out with that knowledge, okay? Excuse me. So step 1, background color is right. Now, what I was just saying in here, if the bar color, if you have a blue bar on a red background, that means the next bar is likely to change the background color. Okay? The next bar is likely to change the background. It's not always, but it's likely to. Okay? So we'll start out with just that. Okay? The background color has got to be right. It's got to be blue for going long, red for going short. Alright? Now, down here in your trigger, ideally, what you want to have is the trigger, the most conservative thing is going to be you're trading when the trigger comes out of, you're going to be going long when the trigger comes out of the oversold. Okay, so do we have any here that did that? Well, just right here where it came out of the oversold, you'd been going long on the up close of that bar right there. Okay, where it came out of the oversold right here, you would have been going long or buying when it came out of the oversold right there. Right here where it came out of the oversold, you've been buying right there, that bar where it came out. Alright, we don't have any here right now that are giving us that signal, but they're all in the blue. So everything's looking to be a long trade right here, okay, so far. But so like right here, if we get a down close on this bar, this is going to go into the oversold right here. This right here will go down into the oversold if we get a down close on this bar, like that. Alright, now it's in the oversold, and you see how the yellow arrow triggered? Because it went in the oversold, and you're on a blue background. The yellow arrow suggests to get ready for a trade. Alright, so right now if we get an up close on this bar, right now, an up close on this bar would give you a long opportunity. It's a 9 range gold. So you take the bottom of the bar is 20.2, you put a buy stop limit at 21.2. Okay. It's as simple as this. Buy stop limit 10 ticks above the bottom of the bar. Now still got to do it 10 ticks above the bottom of the bar just moved. So now I'm going to drop that down to there. And now it's gone down a little bit further and even a little bit further. So now it's 19.7. Okay, so you're going to be buying 10 ticks above the bottom of the bar. 20.7 right now. So I don't know if this bar is going to close up or down. And it doesn't, if it closes down, it's okay, like that. But it can't keep going down like it just did. See, the fact that it kept going down means that it's going to have the top of the bar is going to be right here. That's below the midpoint. That's not the ideal place to trade. Okay, the ideal place to trade would be at or above the midpoint. But there it is right there. Right? Not the ideal place to trade. You see how it just shifted the midpoint? The ideal place to trade would be at or above the midpoint. Like the ones that I showed you a minute ago, like this one right here. The ideal place to trade would have been at or above the midpoint, which was right there. And in this one right here, where it came out of the oversold, at or above the midpoint, which was right there. This one where it came out of the oversold, it was not at or above the midpoint. The midpoint came down to meet it. Not the ideal place to trade. This one right here, that didn't work out exactly right either. It did keep going up, but that's not the trade I would have taken either, because the midpoint came up. Well, it wasn't even anywhere near the midpoint. The bottom came up to it. What is the difference between the white versus the black in the range trigger? Okay, the white happens where you should, if you get white going into the overbought, you should be selling. Alright, if white goes into the overbought, you should be selling. If white goes into the oversold, you should be buying. If white goes into the oversold, you should be buying. If white goes into the overbought, you should be selling. That's what that is. That's the optimum trigger, Jenny. Okay, she asked what the significance was and the difference in the color down here. Now, I haven't done anything with the optimum trigger in a while because I don't need to. The only thing that I was considering doing was making the optimum trigger based upon the background color, giving you that option. But I hadn't figured out how to code it. So I didn't produce that for you. Alright, so this over here did end up working out. If you would have bought the up close on that, it did end up going up and working out, but it's just not the optimum trade. Alright. So I want to do the easy and obvious trades in here for you. And right now I've only done one break-even trade. I should have taken a little bit of profit on it, so we made a little bit of money today. But as it is right now, one break-even trade. Not really much to go on. My charts are not hung. My chart's moving for everybody else? Is it just for Larry that they're not moving? Because everything else is working fine for me from my end. And yeah, okay, just tell Larry again. You need... Okay. They're moving pretty slow. It's a different Larry. They're moving pretty slow, but they're not hung. Alright. You just stated that I have gone from 40 to 19 on the NQ. What made you decide? Alright. I switched to the 47 earlier before you got here, Nilesh. I think. I was explaining something to Jenny earlier. That's why I was on the 47 earlier. I was showing different trade setups and different things that happen or don't happen on a larger time frame, and why I switched to a 19 range. Okay. My NQ chart is not hung. Your trade station chart is off, Larry. My NQ chart is matching my DOM. Right here. Tick for tick, matching my DOM. Okay. Everybody else has everything working. How can you do what automatically, Nilesh? What do you want to do automatically? Oh. Well, that's a decision you have to make. With the range bars, you have to choose what size range bar you want to use. And the whole reason I went over that... Did you just get in, Nilesh, or were you here at the very beginning? Because I explained all that at the beginning. That was why I was on the 47 and why I switched back to the 19. My DOM is actually set up for a 19 range. Right now I have a bracket for a 19 range on the DOM. And the difference is the amount of risk and the profit target. Alright. And all that stuff can be seen right here. If you go here, this is at targetviewtrades.com, go to risk management. The 57 and the 40 are about the same. I'm sorry, the 50 and the 47 are about the same. I have a 60 tick stop that goes to break even after 20 ticks with a 75 tick target. And the 19 has a 25 tick stop that goes to break even after 10 ticks with a 45 tick target. Alright. Again, this is all on targetviewtrades.com. If you go over here to more and go to risk management, all this stuff is here for you guys to use if you want to. While I'm here, if you go to targetviewtrades.com and you go to upcoming and past webinars, I don't know how many of you guys are aware of this. targetviewtrades.com, go to upcoming and past webinars and click on that. This is today's webinar. This was last week's webinar. So when this webinar is done today, it will be put here. Alright. It'll also be emailed out to anybody that attended or anything like that. But if you miss something and you don't get an email or something like that, you can always go here to the home page at targetviewtrades.com. Sign up for the webinar right here. At the end of today, in a few hours, this will have 7:16. You'll be able to sign up for next week's. And this webinar that we're recording right now will be placed right here, and this one will be moved down to here. Okay, so these are all the ones that I've done in the past, all the webinars that I've done in the past. You can go back and look at all those. Okay, all the way back, go over a year. There's a bunch of them if you want to go see any of that stuff that I've done in the past. That's at targetviewtrades.com. Go to upcoming and past webinars. Okay. Okay. Okay, so what I was showing earlier, Nilesh, on the 47 range, I was trading on a 47 range for a few months, and then I stopped. Okay, the white line on the chart. Oh, you mean down here. I was on the 47 range on the NQ, and I stopped doing that because, yeah, the S is just about in place here where it's going to give you a trade. Now, it didn't actually hit the midpoint here. That's the only thing, Daryl. It didn't hit the midpoint. So the way that I usually do that, over here, the Russell's actually getting closer. And up close right here on the Russell, 60.5 up to 61.5 on the Russell would be a long trade. Okay, so here, we'll put that on like that. So I can put the order on ahead of time because these are range bars. I know where the bottom is, so I know where the top's going to be. The top is going to be right here at 61.4. So if the bar gives an up close here at 61.4, it's going to trigger me in, hopefully at 61.5. Now with 10 contracts on, sometimes I get slippage or partial slippage, but what it does is it averages it out, and it sticks it on whatever it averages out to. With this one here, Daryl, you were right about that, but it didn't hit the midpoint. So that's got just a little bit more risk to it. Right? So all we're looking for is for this to come out of the oversold. That's what we're looking for. Yellow is where price actually is. Okay, if that comes out of the oversold, it's going to trigger us into the trade. We'll be in here at 61.5, and it should run up here to 63. Now, I want to take a quick look at something else, because I haven't yet today. Alright, so it is way up here. Alright, that's good. No, it's actually not. I expected it to go down. Alright, so it closed down and not up. Now, that doesn't mean you're not going to trade here, right? It just means the bottom moved. So now the bottom's at 60.2, so you're buying 61.2. See how it flattened out in the oversold right here? That's still okay that it flattened out in the oversold. The midpoint, you don't see it. This black line right here is the midpoint. You see right here, Daryl, it just hit the midpoint on this one. So now it really is getting ready. The low just dropped all the way down to 59.8, so you'd be buying 60.8. Now it can't go down much more than this for me to be interested in this trade anymore. Okay, and over here on the ES, we have a similar thing happening here on the ES. Okay, the low of the ES right now is 99, so you'd be buying 1 like that. Make sure that that stays on top. If this closes down, I'm going to cancel the order here on the Russell. Okay, and the low on this is now right here at 98.75, so this is going to go down to 375. 2 points, 8 ticks above the bottom. The reason this is 8 ticks is it's 1 more than the 7 range. Okay, 1 more than the 7 range. Do you get that? Nilesh, the midpoint is this black line right here. Right? You turn that on by using the TV Trades range trigger. It's inside the TV Trades range trigger. Okay. So we're looking, this is now got a low here of 59.6. I'm not going to like this too much. 59.6 is about as low as I'm going to go on this. If it gets in up close right here, it'll be at 60.5. Nope. I'm going to cancel this order here on the Russell. Alright, and the ES trade. Now the ES has got a low now of 98.75, so that's still right there. Now, the NQ showing weakness here too. You see that? It's failing to put in a higher swing, failing to continue up. It keeps putting in lower lows right here. So I don't know what's happening here as far as the overall market conditions, if they're going to move up or not. You see how the up close on that was well below the midpoint. That means the midpoint's going to act as resistance. Okay, so I'm not interested in that. On the range tree, you did what I said, but I also have a red line in the range tree right about 1500 time. How do you get that? This one right here? I think that's part of the conservative trade. That's what you're talking about, right, Wayne? That's, are we still in the right place on this? Yeah, we are. Okay. We have to be 2 points above the bottom of the bar. Alright, 2 points. This is a 7 range. So 2 points is 8 ticks. It's 1 tick more than the range bar size. So 2 points is right there at 375. Okay, now the Russell is starting to move up, in spite of the trade being disqualified, in my opinion. Yeah. So, Wayne, that is... It's on by default when you put a range trigger on, I think. Let me just turn it on and see. Range trigger. Once you put in the password, I think, Wayne, you put in the password, it will turn on the conservative bars. Okay. I'm going to be changing this password pretty soon, I think, guys. Okay, I think it at least turned that on. It didn't turn those on. I don't know exactly what I did. Turn that on. Is it the div area? No. I shut that off. Optimize line. No. Are we still good with that ES trade? I think we are, right? The low is still in the same place, yeah. So we're just waiting for that to close up. The indices, I almost don't want it to, because the indices are showing weakness right here. I'd rather have it closed down and then everything just turned down right here. But the background colors don't look like they're going to change. Well, they did over here on the NQ. Right, so we can start looking for shorts on the NQ. And we got a down close here instead of an up close, so this is getting further away too. It's not going to be at 325. Right, it's still a trade. If it comes out of the oversold right here, it's still a trade. Okay, even though everything else is pretty choppy looking in here. See, if we would have taken the long trade here, it would have been just enough to get our stop to break even, and then we would have had a break even on that. And the gold did end up moving up from the trade that triggered back here. It moved up pretty nicely, actually. And we just don't have anything else right now, right at the moment. After restarting, video is still hung. You're leaving and we'll watch the recording. Okay. Okay, Larry. Because it's not hung for anybody else. Everything else is working for everyone else. Alright. So for long, the market has to go below the midpoint. It doesn't have, it's got to hit the midpoint. Alright, I want it to hit the midpoint and then move up off of the midpoint. It can go below it, but it doesn't have to go below it. You know, as a matter of fact, if it hits it and it closes right at it, I'll show you. Let me see if I can find an example. The Russells have any. What I'm looking for is this right here. You see how it closed down and it was right at the midpoint on the down close, and it went into the oversold at the same time. Right here. Went into the oversold to where the down close was right at the midpoint. You see that, Nilesh? That's where I would be aggressive and just buy the open of the next bar. Right? The ES is just about to trade now. And it's now going to be 25. It's in the right place. So the ES is just about got the trade going here. The NQ in the meantime is just about got a short trade going here. Alright, so the NQ you got to do 5 points from the top of the bar, 33 down to 28 is what you're looking at on the NQ. So the NQ is looking like it's going to turn into a sell, and the ES is still kind of looking like it's going to be a buy. You see the red background versus the blue background. But this right here, unless when you have that opportunity right there, that's an aggressive trade. I would take that almost every single time. Alright, be aggressive. You don't have to wait. We just triggered in on the ES. So we're long the ES right here, exactly where we want it to be. And the down close on the NQ is now going to be at 30 instead of at 28 is what you're going to be looking for. Okay, I think that's still correct, right? 35.25, now it's going to be at 30.25. 5 points off the top of the bar is what you're looking for on that. Okay. Hang on a second. Let me bring this up. But on the NQ, the red area is on the blue line. I was looking for the down close here. It doesn't matter. I'm not using that type of trade setup, Wayne. I'm not using the div part of this. I'm just using the trigger part. Okay. Alright, so on the ES, when it goes 4 ticks into profit, I have to bump the stop to break even. I might lock in some profit if I get an opportunity to, just because we took a break even on that Russell trade where we could have locked in a little and we didn't get any. So on the NQ, 35.50, you're looking at 30.50 right now on the downside. And it looks like it might keep going up right here. 35.75, you're looking at 30.75 on the downside. Okay, what's the high of this so far? Oh, 1. It's getting up to 1 1/4. For me to bump the stop to break even. Yeah, I wasn't doing that aggressive divergence trade in here on this one. I was just doing the basic. Well, I haven't done anything yet, but I'm still looking for the basic conservative trade over here. Is what I'm looking for on this. All right. And we ended up with nothing over here. The ES is still trying to work itself out. It should get up to 3 1/4. The ES should go up here to the prior swing high at 3 1/4. All right. If it fails to get up to 3 1/4, it should get up to here 150. Anyway, 150, and that'd be enough to get our stop to break even, get the risk off the trade. Right. The NQ did finally give the down close, but the background color changed. You see right there, you got a warning about the background color changing. We got that blue bar on a red background. Now, that is something that you could have told me about, Wayne. I wasn't really paying attention to. I wasn't really looking at it. Okay, so over here on the Russell, we did end up getting a trade, and now the background color has changed. So you're going to be looking for short trades over there. Okay, over here on the gold, we got a nice leg up. We'd be looking for a retracement with another leg up on that. The ES, we're still looking for it to get up to it just enough. It had to go one more tick to get my stop to break even on that. And the NQ is starting to work. If you left the trade on, it's starting to work. You would anticipate the NQ is going to get down here to 22.75. Alright. Now, I'd rather that the NQ didn't go anywhere, or went up. They bring the ES up with it, because the ES is the actual trade that we're in. See how the background color changed here? And when the background color changed and you got the down close, you're not looking for shorts anymore right here. You're looking for long trades. Alright? You only had a small opportunity there looking for shorts, and they never happened. So now you're back looking for longs. Over here on the Russell, you have the same scenario going on here with the Russell. Here you have a red background, so you're starting to look for shorts over there. Whereas the ES, we're still waiting for that to go one more tick, and then I'll bump my stop to break even. Right, there it is. Now, my rule says wait till you get 4 ticks in profit to move the stop to break even. I'm going to lock in just 1 tick on this so I have some profit. And it should make it up here to 325. It has taken forever to do anything, but it should go up here to 325. You see these numbers right up here? It wants to get up to those numbers. Right there. Okay, it wants to move up to those numbers. There you go. I'm going to lock in 4 ticks. That's $500 for me, and I'm out with 500. It still should go up here to these numbers right here. Okay. And I'll slide that off to the side. My NQ DOM is in the wrong place. I'll slide that off to the side, and that off to the side, that off to the side. Alright, so the NQ switched back to blue, so now you're going to be looking for long trades again in there. And this right here was the ES long trade that we took, and we just took 4 ticks profit on that. It should make it up even further up here to 3 1/4. Okay, should make it up to 3 1/4 for you. Alright. The Russell will change right back to blue, and the gold has stayed blue the whole time. So you guys see, this isn't hard. Background color's right. If the background color is blue, you're looking for long opportunities. If the background color is red, you're looking for short opportunities. If you want to be conservative, sort of conservative, and it's red, anytime the white goes into the overbought, you sell. Alright, that's kind of being conservative. It's a little bit of aggressive. The way that the optimum trigger is set up, anytime the white goes into the overbought or the oversold, you buy or sell the next bar. That's the way it was designed to begin with. Now, I sort of teased you guys at the beginning. Is Matt in here? Matt. Let me see. Matthew. It says you are here. Good. Okay. Your range bar stayed blue. Jerry, you might have a setting just a little bit off. Okay. The setting in here, in the range trigger, if you shut off the background color like that, then it'll give you the indication. It should give you the indication. If you have the TV trades on, it should give you the indication you're looking for. That did make it all the way up here to 3 1/4. Alright, the NQ didn't give us a trade here because we didn't get into the oversold, but the Russell's moving up okay. The gold, we'll see if that moves down and gives us something here. Alright, so this is all you're looking for. Blue background, you're looking for longs. Red background, you're looking for shorts. You know, if you have an overall bias, if you're thinking you only want to take long trades, that's fine. Then just take long trades. So, Jerry, in here on your TV trades range trigger, on the style tab, what do you have checked over here? So you can take off one of those. See, I have 2 lines down here at the bottom. That's because I have the optimum line on there too. Take off the optimum the optimal lines. Good, you're there, man. Okay, so what I don't know, were you here at the very beginning? Where I showed, well, not on a 7 range, but if you do that on like a 50 range or a 25 range on the ES. The swing trade stuff, that's what these are. It's a 25 range, so you would sell the open of the next bar, buy the open of the next bar, sell 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 the open of the next bar. You see? Okay, uncheck it. Jerry, uncheck that and see how it works out for you. Okay, I am working on it, man. I know you really want to get that going, and I am working on it. I haven't stopped again. It's on my list. All right, send me a screenshot of what your active indicators look like. Take a picture with your phone and text it to me. You have my number, right? I'm sorry. Do you know how to? do you know how to take a picture with your phone and text it to me? And one of you guys, I think it was Terry. One of you guys was not terribly technically gifted. Nilesh, what don't you have? Alright, so we're oversold right here, but this bar is not touching the midpoint. Alright, now it doesn't have to touch the midpoint, but that's where I find is the best place to trade from. Alright, now if you don't understand that, let me just draw it for you. Okay, if you don't understand why price goes up and down, right? And when it pulls back, the midpoint is where I like to trade off of. When it gets to the midpoint right here, I like to trade off of that, because that usually results in another leg length this big going up from there, that big going up. This travels over here. Okay, and this right here should be equal to or smaller than this right here. Okay, in a trend that's got any strength in it, then this right here needs to be equal to or smaller than the prior leg, the prior pullback leg. Okay, that's why I like to see it pull back to the midpoint. Now, this is not a moving average or anything like that. It's showing you this the swing high and low since the last time the trigger came out of the overbought or oversold, or went, you know, depending on what direction you're going, what color the background is. And what it does basically is it replaces it. You know, what you used to have to do on a blue background, you would be drawing from right here where it came out of the oversold. You would grab the bottom here and draw up to the top, and the midpoint is somewhere in between there. This does that for you, so you don't have to draw that, all right, to find the midpoint. I mean, I can do it without even drawing anything. You guys can too, probably, to some degree. No, you just got to look at this and say, okay, well, this was red background. So with the red background, you draw from the top to the bottom. Okay, with the red background. So in this case, right here, you'd be drawing actually from way over here down to here. You see, and the midpoint is right there. Okay, when you have a red background, you draw from back here to here. It's not like a moving average or anything like that. It's a swing high and low and midpoint based upon when this comes out of the overbought or oversold. So you're trading, you don't understand. What don't you understand? English. I said a lot of things. So what part don't you get? Alright, It's 327, and so far we have 4 ticks on the ES. 2 trades and 4 ticks on the ES. I could have taken a little bit on the Russell. I could have taken a lot more on the ES. I should have let that run a little bit, but Jesse has it here. I can't. I don't know how to reply just to you. Enter my message. There. I'll send it. That's my number. Everybody gets to see that. That's fine. So text me a picture. There, Jerry, and I'll see. Okay. Do I ever trade the YM? I just showed the YM a few minutes ago. I don't trade it myself, Bob, but you certainly can. And I showed the YM a little while ago when I was doing this thing right here. I showed the YM on the 250 range. But you can trade it on whatever you want, you know. And it's really a simple swap to get to the YM. I would actually do the YM on the same range as the Russell if I was going to do the YM. You could do it on 19 range too, but I would do it on the same range as the Russell. So I would just flip the Russell chart to a YM, make it a U, and then it's all the same stuff. You're just doing the YM. Okay, and that's the way it is with any symbol. Okay, so right over here, I want you guys to see this on the NQ right now. See how we got down into the oversold, and when it came out of the oversold, it wasn't coming off the midpoint, so I didn't want to take that trade, right? On the up close there, I didn't want to take that because it wasn't going off the midpoint. But from there, it did not go into the overbought. When it came out of the oversold, it did not go into the overbought. That shows weakness, all right? That shows weakness and strength. So I don't want to take any trade in that direction again until it does go all the way into the overbought. Okay? Did you get that? So I don't want to take any trade. If it comes out of the oversold, it has to go all the way into the overbought for me to want to trade in that direction again. Alright? It's like right here where it came out of the oversold and it didn't go all the way into the overbought, there or there. I wouldn't want to trade either one of these. Anything after this. I wouldn't take this trade. I wouldn't take this trade. Well, that turned red anyway. But it's got to make the full cycle from the oversold to the overbought before I'll trade in that direction again. Right, because it shows weakness if it doesn't do all that. Alright. Hey, Sean. Is Sean in here? Okay. I don't know if Sean's in here. Sean is doing a lot of things all at once. That's good. Getting it all done. Alright, so let's go back here. I thought we almost had a trade here on the S. We do almost have another trade here on the S. So we've got a low right here of 1 1/4. Now you could have gone aggressive on that ES, right? Because the down close was right here. When it went into the oversold, this is what I was saying earlier. When it went into the oversold, the down close was right here at the midpoint. So you could have gone aggressive on that and just taken an entry right here at the midpoint at 175, right in there. Alright, or you could wait for the up close. Now, it didn't go... Well, I guess from here it did go enough into profit to bump your stop to break even, so it's too late to take the aggressive trade right now. So you'd be waiting for an up close from here, where it comes out of the oversold. Okay? You don't want to do anything over here on the NQ. It's not showing any strength at all. Here on the Russell, you didn't get into the oversold, so you're not going to do anything with that. Here on the gold, it didn't pull back far enough. Alright? When it came out of the oversold right here, it updated the midpoint, but it didn't pull back far enough prior to that to take a trade. Okay? So there it is on the ES. There's your up close on the ES. So your entry point should be right in here. Okay. And what time is it? It's 3:31, so we have a half an hour left. Excuse me. We have a half an hour left in this session. Okay. And so hopefully we'll get some more trades off. Okay. Here's the history. And the Russell's moving up. It didn't have a trade here because it didn't go all the way into the oversold, so you didn't have a trade there. The ES, we anticipate it's going to get up here to 305 right now, and there's a good number right there for it to go to. Remember those numbers I showed you before? If you go back and look at the recording later, when we had the last trade we took right here, I said, look at the numbers right here. It's attracted to those numbers. Well, 305 is the next number that it's attracted to, right here. Okay. Now it's just going to go up one more tick, and I'll bump this stop to break even. Maybe lock in a little bit more profit. There it is. Stop going to break even. So I'm not going to lose anything on this. And we're in a position to actually make a good chunk right here if it gets up to 305. Okay. And as we get closer and closer to the top of the hour, we ended up with a break even. As we get closer and closer to the top of the hour, I think we're going to see a little more volatility, a little more volume creep into the markets. Okay, so this ended up being a break-even trade for me right there. Now, remember, I showed you this earlier. If you go here to targetvtrades.com and you go to the More Risk Management, for the 7-tick range, I have a 10-tick stop that trails to break even after 4 ticks in profit. That's what I just did with that one right there. So on a 7 range, I had a 10-tick stop, went to break even once I had 4 ticks in profit. Alright, and it came back and took me out of break even. So right here, I was in at 275, it went up to 375, and I bumped it to break even, and so I'm out of that trade now. Okay. Can I go with one market in all the trades I took? I can. It's a little bit different though. What I did in the morning is a little bit different. It doesn't use the background color. But I can go over just one market and show you all the trades that triggered. How about that? Okay. Trading the NQ now, it's not really a great place to take a trade right here, right now. Alright, the midpoint has to reset right in here. It came out of the oversold, so now it's just got 1 bar's data in it for the midpoint. Okay. Did you email it to me, Jerry? Because it didn't come through on my phone. I have my phone right here. I got stuff from Sean and half a dozen other people, but nothing from you, Jerry. Let me make sure I put that number in there correctly. Hang on. Hang on. Yeah, I did. Okay, so I'm not going to do the whole day, but I'll do a chunk of it right here, okay? So we'll do it, just do it like this. Right, so I'm going to do it, I'm just going to forward the bars one at a time like this, okay? So like right here, watch down here. Now we're nowhere near the midpoint. You see right here, we're nowhere near the midpoint. So this isn't going to give you a trade. Going into the oversold by itself isn't going to give you a trade. You got to go from here all the way down to here. There's going to be at least 2 bars, maybe 3 bars before you might get a trade set up here. And that's what I would be saying. Right here. I'd be saying, well, this is all getting recorded, but right here, what I would be saying is, okay, we have a long way to get to the midpoint. So for me to want to take a trade, even though we're going into the oversold on a down close, for me to want to take a trade, we're going to have to go to the conservative trade coming off the midpoint and out of the oversold. So I know right now, because these are 7-tick range bars, and there's so much space in between here and here, I know it's going to take at least 2 bars to get down to the midpoint. So we're 2 to 3 bars away from a trade at this point right here. I know that ahead of time, right? So we go 1 more bar. Okay, now that bar gave a little bit of up movement before it moved down. So again, I know that we're at least 2 to 3 bars away from a trade if we're going to get one. Okay, so right here it comes out of the oversold and it resets the midpoint. So you don't have a trade here. Alright, so we go over another bar. Now it runs up and now you're looking for it to pull back down to the midpoint again. Alright, so right here it's gone up into the overbought, so it's okay to take a trade on a pullback. So you're looking for it to pull back to the midpoint, which is going to be right in here now. You see how it's changing? The midpoint's changing. So it pulls back, it hits the midpoint, but you're not oversold. Right here, you're not oversold. So you don't have a trade right there. It's got to be into or out of the oversold is where you're going to take the trades. No trade there. Now I'm just looking right now, Nilesh, I'm just looking down here right now. Okay, because I know I'm not going to take a trade in the blue. I know I'm not going to take a trade unless it goes into or comes out of the oversold. So I don't really care what's going on with the price. I'm looking down here at the bottom. Bam, finally it goes into the oversold. So up here, what do you have going on? When it went into the oversold, it got way down here below the midpoint. So The yellow arrow triggers right here. That is a thing that you can turn on that's going to show you when it goes into the oversold and you have the blue background, it's going to give you a yellow arrow. That is part of TV trades right here. It is this trigger alert notice. Okay? It's under the style tab of TV trades, the trigger alert notice. It gives you that yellow arrow telling you the background is blue and you went into the oversold. That's what it's telling you. Okay? And so right here I'd be saying, okay, if we get an up close and the up close is at or above the midpoint, then that's something I might want to trade. Alright, you don't have a lot of room to go to get to the swing high, but that's something you might want to trade. So you could put a buy stop limit order on, waiting for that to happen. And bam, there it happens, right at the midpoint. You get the up close, it takes it out, so you have your buy stop limit order right there, you get filled, and I don't know what happens after that. It looks like it might stop out. It pulls back. Now you got a 10 tick stop on this, so this isn't a stop out right here. But that is. So that one would have stopped you out right there. Okay? And now you go a little further, the background changes to red. So now, looking down here, you're looking for it to come back up and get into the overbought. Alright, so right there, you're in the overbought, but you're not touching the midpoint. The yellow arrow with a red background, again, says you got into the overbought, and you have a red background that's pointing down, saying watch for the short trades. Here it is. Now you're just about at the midpoint right here. You're not exactly at it, but you're at the point where you could take a trade if you wanted to, if the next bar closes down. Okay? So the next bar doesn't close down, it closes up, but you could still take the trade if the next bar closes down. Alright, because you're up here in the overbought, it's going to pull you out of the overbought. It's going to be a conservative short trade if you take the next bar closing down. It didn't, it closed up, so now you're too far away. Alright, and now, not only are you too far away, but the bar color is blue on a red background. That suggests that the next bar, the close of the next bar, might change the background color. Right here, that's what that suggests. That's what I was trying to tell you guys earlier. Alright, so it suggests that right here, and then it does. Alright, so now you have a blue background, and now your midpoint is here, and you're not looking to sell the midpoint now, you're looking to buy it, because your background is blue. Right, so everything just changed, and now you're looking for this to get down into the oversold for potential buying opportunity. Alright, let me slow down, I'll let you absorb all that. That's what you're looking for, right now. Okay, you're looking for that to get down, so you might have a buying opportunity. Next bar, it doesn't go. Next bar, it doesn't go. So the midpoint's rising right there, you see? Midpoint's still rising, so finally you get a down close. But look how far you are from the midpoint. From here all the way down here. It's going to be 3 bars, minimum 3 bars before you get a trade set up. You'll be in the oversold in 2 bars. It takes 2 bars to get from the overbought to the oversold. Alright, minimum 2 bars to get from the overbought to oversold. So you'll be in the oversold, but it's going to go flat in the oversold probably. Alright? So there it is, gets in the oversold, you get yellow arrows saying look for the long trades. Next one, another down close, you're flat in the oversold. Next one, you're still flat in the oversold. Now it turned red, you see the bar turned red? That suggests that the background color will change on the next bar. Right? If it goes down anymore, the background color will probably change on the next bar. It could change anyway. So you don't want to have a buy stop limit order waiting here. You want to wait and see if the background color changes. Alright? One more bar, the background color changes. So now you're not looking for short trades you're not looking for long trades anymore. Now you're looking for shorts. So you gotta let it go up to the overbought like it just did. Now it's not actually in the overbought right there. I know that looks like it did, but if you spread this up, see it didn't make it into the overbought. Remember, it takes at least 2 bars to get from the oversold to the overbought. So it looks like it got to the overbought, but it didn't. So you don't have a trade there, right? Goes over one more. Into the oversold again. Now you're still looking for it to get back up into the overbought, and your midpoint's moving around now. So right here, the next bar gets into the overbought. Now you got a blue bar on a red background. So you can't be proactive if you have a blue bar on a red background because it could change color on the very next bar. The background color could, and you'd be switching back to long trades. You didn't in this case, okay? So this is a good example right here. You didn't actually switch. You have a blue bar with a red background. It didn't change color, but it hit the midpoint. It gave you a down close, and it came out of the overbought. That is a trade right there. Alright, that is a trade right there. Now what it should do is get down to this level right here. Okay. It didn't get down to there, but it did move enough. This is the ES. It did move enough to get your stop to break even and take some profit. If you got the entry at the right point, right here at 87.5, it ran down to 85.5, so you had 8 ticks in profit in that. Potential. So I would have locked in something. 4 ticks probably. I would have gotten a point out of that. $500. And then background color changes again. You see how you had the red on, the blue on the red background, suggesting that it was going to change to blue. Well, it finally did change to blue over here, right? So you don't have anything that you can do here right now. Now you gotta let the midpoint reset as it pulls back here. All right, you get in your oversold. You want to go down, hit the midpoint, and bounce off the midpoint. Right, so you did hit the midpoint, you did bounce off it, you did come out of the oversold, so you'd be going long right here. Okay, it moved up a little bit so far. Now it got choppy and it moved down. So that one they would probably stop you out. If you didn't move your stop to break even in here, you might have been able to get it to break even in there. You might have been able to get it to break even in there. But then it changes to red. Right? So now when it's on red, what are you looking for? You're looking for it to get into the overbought and come out of the overbought. Bam, right there. You're in the overbought. You're looking for it to come out of the overbought. This is one of the ones where you could be aggressive because the up close was right there at the midpoint when you went into the overbought. You could sell it right there without waiting for it to come down. But if you do the conservative trade, you're going to wait for it to come down. You're going to sell it right here. And, well, it moves down eventually. Okay? I'm not going to go through every single trade. I want to make some money right now. Okay, so I'm going to go back over here. But you asked me to go through the trades. So did you understand what you're looking for and what I'm looking for every time? Like right in here on the NQ, for instance. You know, the NQ had a long trade from this up close right here. The NQ had a long trade. It came out of the oversold right there. NQ long trade. It's not too late to get in. It hasn't gone 10 ticks into profit from there. Okay. And the ES had a long trade from back here a few minutes ago. That is too late to get into. The Russell had a long trade from right here a few minutes ago. That's too late to get into. The gold doesn't have anything. Okay. But you see how simple it is. You're just looking for the background color to be right. Price to go into and come out of the oversold is a conservative way. Go into and come out of the oversold is conservative. The aggressive is to go into and then you're buying as soon as it goes in. Now the NQ trade, stop is going to break even on that. Alright, I'm actually going to lock in a point on that. That's $200 for me with 10 contracts on. Okay. And it should make it up here to 45 something. 45 and change up here is where it should go to right now. Alright, we have a point locked in and I'm out with a point. So I'm out with $200 on that. Okay, but you saw how simple that was, right? It's always the same. It's not hard to do this. You know, you can be aggressive, you can be conservative, you can do it however you want. There's opportunity after opportunity after opportunity after opportunity. Now, the stuff that you may have missed in the beginning, was, I explained this stuff, right? You were here for this when I talked about this. Okay. The whole idea behind the midpoint is this. Right? Price is always doing the same thing. Always. It always has been, it always will be doing the same thing. It's going to go up or it's going to go down or it's going to go sideways. But when it goes up, a trend is defined by higher highs and higher lows. Yeah, that's your high, that's your low. That's your higher high, that's your lower low. That's your higher high, that's your lower low. Alright? Ideally, when it pulls back, it's going to pull back 50% of the way and then run off that 50% mark. That's the midpoint. Okay? That's what I like to see, is that midpoint. Right? I've been doing this a very long time, and I know that trades that bounce off the midpoint are more likely to move up at least to this point. Right? At least to that point. In the space between here and here is plenty of money. You know, there's plenty of space in there to make money, the way that I trade anyway. There's plenty of space in there to make money. You know, like right here. If it goes from here to here, that would have been great. That ES trade that I took earlier, this one right here that I took earlier, and wasn't there another one that I took? Was that the only one? Yeah, well, I set up to 305 on that, right? And was it? This one was 305. This one was 375, I think. But from here to here, with 10 contracts on, that was a lot of money. That's a couple $1,000, maybe $1,500 from there to there with 10 contracts on. And just this one from here to here was $1,000. Okay, with one contract, it's $100, but it's still money. It's $100. $100 is $100. That will put gas in your tank and food on your table. Okay, so that's what the midpoint is all about. Midpoint is determined based upon what's going on down here in the trigger. All right, so the high and the low. See, there's a thing. Let me show you. There's a thing called the Donchian channel. Right. Let me bring that up here for you. Don't get lost in all this stuff because you can go down a rabbit hole in this that will just kill you. But there's a thing called the Donchian channel, and inside the Donchian channel you set this thing right here, the length, and you can set it to like 50 or 20 or whatever you want. All right. And what that's going to do, if I get rid of this, what that's going to do is it's going to give you the high and low going back 50 bars or 20 bars. It's going to give you the high and low from that point. All right. Now this right here is the midpoint. It's going to give you the high and the low going back 50 bars. And it's going to give you the midpoint between the high and the low. Alright, so that's just going back a certain number of bars. It doesn't really have any criteria to qualify those bars, other than you just saying, okay, I just want to look back and see what the high and low was for the last 50 bars. So you can do this, a lot of people do this on a daily thing, on a time-based thing, where they want to look back over a 30-minute chart and see what the high and low was for the last, day on 30-minute intervals. And that, that might be useful information. Okay? But for our application of it, it's not terribly useful. Okay, it doesn't give you qualified information based on the time frames that you're working in. Right? It just gives you a random number of bars back, and a lot of things can happen in that random number of bars back. The trend can change several times in that random number of bars back. But when you throw this down here, and it's based upon this, where it goes into and out of the overbought. I mean, all the trades are triggered based on when this goes into and out of the overbought, right? Overbought or oversold. Goes into and out of the overbought or oversold. Everything is based upon that happening. So that makes the high and low, the swing high and low, that much more critical, knowing where the swing high and low is with regard to when this went into or came out of overbought or oversold. You see something just happened here at 350. It gapped up and then gapped right back down. But that makes everything that much more critical right here. All right. That's why I have the midpoint. I'm using the midpoint based upon this information that we get out of here. Okay. Lightning detected in my ear. 6.1 miles northwest. Well, that can't be good. I plan on going there very soon. Okay, so like right here on the NQ, we just had a trade. I'm going my stop to break even on that right now. Hang on, here it is. Now my stop, I'm going to lock in something on this. 38.75, that's 12 ticks, 16 ticks, 20. I think that's 20. Yeah, 20. Right. That was in here. I had a horrible entry on that, but still, I was able to grab a little bit of that right there. Okay. And if it pulls back up here into the overbought, I'll do it again. But right there, you saw right there where it came it came off the midpoint, out of the overbought. That's what you're looking for. Right here, you're in the overbought, but you're not at the midpoint. You didn't come out of it yet. So if it hits it and gives a down close, I'll take it again. All right, there it is right there. I'll take that again if you get a down close right now. And you didn't get a down close, so you gotta wait for the down close. So wait for it to come out of the overbought, and there it is. It's out of the overbought. All right. So I want to switch colors on us. Switch colors on us. So that's not a trade. It's not actually a trade in there. See when it went to blue right here? That was the indication to wait and see if it switches colors. And it did. Alright. I'm on the 7 range. I'm on the 7 range. That's why it jumped so much. Okay. Well, that makes sense. Let me go back here to put that on the 19 range. Wow. That makes sense. Alright. That made sense why it was taking so long to get that profit, too. Alright. Thank you for pointing that out, Wayne. So how did I get into that trade? I saw it came off the midpoint. I didn't realize I was on a 7 range, but I saw it came off the midpoint. So what I did, I saw it came off the midpoint. I just click in the red. The way my DOM is set up, if the trade triggers and I don't have the order on ahead of time, I can just click in the red and it'll put me in right at the current. It'll put me in right at the current ask. All right. Or I click in the green, it'll put me in right at the current bid. It's a limit order at the current ask or a limit order at the current bid when I do that. That's the way my DOM is set up. It's not a market order. Okay, but when I see a trade that sets up, if I'm not in it and it's in a place where I could trade and I haven't missed the trade, then I can just jump on it like that. Okay. And the way that was, I was off of this right here. Right, this is what I was going off of. It was this right here. It pulled up to the midpoint, gave a down close on the midpoint, and I jumped on the trade, and I got filled like down here somewhere before I took the 20 ticks. Right? I didn't realize that I was on a 7 range at the time. That's why it took so long. It took this many bars to get 20 ticks. I had to go all the way down here to get the 20 ticks. But anyway, you'll be able to go see that in the recording. So right now we're back to the 19 range, which is what my DOM is set up for, and we'd be looking for a pullback up here to the midpoint. It's 3:53, so we don't have that much time left. We have 7 minutes left, so I want to make sure I answer everybody's questions as we get closer to wrapping this up. Right here on the gold, we're just about at the midpoint. We're just about to have an up close right at the midpoint, and we're just about to go into the overbought. Right? If it gives us a down close, it's not going to be in the overbought. It's not going to be a trade. We need to have the up close here on the gold. We've got a blue background here. It could pull back and give you a trade. Heads up, the anchored text tool will be removed soon. Use the text tool to anchor the upside. Okay, good to know. I didn't see this over here on the S. If I would have taken that on the S, it's actually not too late to take that on the S because it hasn't gone four ticks into profit from the entry point, which would have been right here. Right, it hasn't gone 4 ticks into profit, so it's not too late to get in on the S trade right there if you want to. I just did, and I'm going to bump my stop to break even right now. Okay, and now I'm going to bump my stop to plus a point. And plus, I went to go for 2 points, but I only got 7 ticks. Alright, but that's $750 to me. Okay, with 10 contracts on. And we're in the blue over here right now on the NQ. We are back on 19 range, but we're in the blue. We're not going to have a trade there. The Russell may give you something here, but it's not ready yet. The gold, I missed the gold right here. I was looking for the up close on the gold to get that into the overbought so we could sell it, but it gave it down close instead. So we don't have anything that you can do there on the gold right now. Okay. Alright. Well, that's live trading. Everybody with me on all that? So I have this spreadsheet. It's now 3:55. I'm just going to fill this out. Today is 7/9, right? 7/9. And I have a spreadsheet like this that I do in the morning session that goes back to January 2nd of 2013. It's got all my daily results going back all the way to January 2nd of 2013. So 12 years of daily results. But here, right now, on the NQ, we're sitting at 24 ticks. Okay, and on the Russell, we have no ticks. And on the ES, where's the ES? Here it is. On the ES, we have 11 ticks. So on this session right now, with 10 contracts on, we're up $2,575. With 1 contract on, we're up $257. Okay, and this number down here becomes a 10. It's our 10th. Our 10th Wednesday that we've traded live. Alright, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Our 10th Wednesday that we traded live. So our average on the Wednesdays is $4,065 with 10 contracts on, or $406 with 1 contract on the Wednesdays. Okay, I'll slide this back over here. You guys can all have access to this if you want. I'll share it out to you. I'll copy this link. Anyone with the link can view. Okay. So I will give you all that if you want it. Hang on, I'm trying to find this right here. Okay, there you are. Yes, I will give you that right now. Here is select. Oh, I mean that select all. Paste. There it is. Send to all. somebody click on that and see if you actually see if it brings it up. Okay. There was another trade here on the NQ just now. I don't know where my NQ DOM is. It's too late to put it on, I think. It is. It's gone 10 ticks in a profit, so it's too late to put that on. There's another trade here on the ES. That's... Is it actually another trade? It came down and hit the bottom. Yeah, the bottom's actually moving up right there. But it did go, from the last trade that we took, it did go up to the prior swing high, which is what we're expecting, right? And over here on the Russell, we got our first trade. Actually, that's a valid trade there on the Russell. That's the first valid trade on the Russell, is right there. Okay, so everything looks to be a little bit bullish here as we run into the close. We got 2 minutes left. So the gold is actually at a point, if we got an up close on this, it might bring it into the overbought, where you could look for a shorting opportunity on the gold. Okay, it's possible that all that could happen. Let me go back here and make sure I answered everybody's questions. Do I have? It did. Good. Okay, you can all see the Google Doc. Good. You have access to that. Yes, you all do. Alright. It is now 3:58. What I didn't put down was the total number of trades that I've taken in the in this session. So far we've taken 6, it looks like. 6 trades. And you know, there's a couple more in here if you wanted to take them. The Russell was from right here at the open of that bar. The ES was from right here at the open of that bar. The NQ's almost got another trade here. If you get a down close on this and then it's followed by an up close, then that would be something you can do there on the NQ. Okay. Alright, you have a great night too, Wayne. Alright, so it's 3:59, guys. Our hour and a half period is just about wrapped up here. You know, I might have given like a 2-minute late start. As we run right into the close right here, I want to see what's going to happen with these guys right here as we run right into the close. Okay, because the Russell is at a point right now, you would have bumped that stop to break even like that. Okay. I'm done adding stuff to the spreadsheet. I just want to run this one out right here and see what happens with it. The break even on that. Okay. The NQ's actually got an aggressive trade you could have done right there. An aggressive trade on the NQ that I didn't do. The S, now it's closed, right? Well, now we're getting to 4:15. But the S trade is starting to trigger right now. It's starting to run. You can go to break even on that one. And that's going to be a break even too, I think. Yep, that gave me a break even too. Alright, the NQ one turned out pretty good though. Alright, so I haven't even talked about this at all. If you haven't taken a trial with us and you want to, go here to tvtrades.com, click on the orange button right here. That's going to bring you down to the bottom. This is what it costs, $25 a week, $90 a month, $97 a year. Most people do the $90 monthly. The cheapest is the annual. Actually, well, I've been talking to somebody just signed up for the annual. You actually moved from the monthly to the annual because you realize that this is actually 30% cheaper than this. It's 30.7%. It's actually kind of funny the way the math works out. This is 20.7% cheaper than that, and this is 30.7% cheaper than that. But the weekly is what people like to start out with because it's only $25. You can get your feet wet, but it makes sense to move to the monthly after that if you want to. Anyway, that's what it costs. It's cheap. It's easy to get into. Get your feet wet. Like it. Don't like it. Let me know. If you have any trouble with it, again, let me know. All right. I want to help you guys. I want you guys to learn how to do this. Right. I want to make you guys traders, and this is a subscription-based thing, and it's a really dirt cheap subscription-based thing. So it doesn't take long. Like in this session, we made. What do we make? Where's that spreadsheet? Made 200 and something per contract, right? $257 per contract. That's like almost 3 months worth. In this session with one contract, you made 3 months worth in this one session. Last week you made enough to pay for a month. The week before that you made enough to pay for 2 months. The week before that, and that's all with one contract. You know, with 10 contracts, I made a year's worth every day. But so, you know, if you have trouble for the $25, if you're having trouble, let me know, and because I want you to get this, and I want you to stay subscribed and keep multiplying your wealth by just paying a little tiny monthly fee to me. That's it. Alright, I am gonna wrap it up. Thank you all for coming again. You can go to tvtrades.com and just click on any one of these orange things. This video is going to be in an email to everybody that's in here, but if you ever want to go look at any prior ones, go to targetviewtrades.com, and go to upcoming and past webinars. Alright, in about an hour, you'll have next week's webinar up here with a link to next week's webinar, and the video for this week will be right here. Okay, it'll be right there. Alright, that is going to be it, guys. With that, I'm going to wrap it up. Thank you all for coming, and we'll see you next week if we don't see you before then.